Oh, come on. I need 1,000. How many do I have? Damn it, I'm like 5 short. Damn it. Seven lights still flying high. All right, let's get the ball rolling. All right, that's going there. What do we have over here? Not that. That, and that, this, that. All right, I think we're ready. Alrighty. Let's get the ball rolling. What do we got? Nope, that's not it. Uh-oh, where the hell did it go? Okay, you got Yahoo Finance. There it is, right there, Yahoo Finance. Getting ready, almost there. Okay, get this camera going too. Almost ready. All right, let's get the ball rolling. All right, let's do this again. Because apparently, not letting me do this the way I want to. And there we go. So, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a simple, safe, predictable, and consistent 1% per week. Making a killing with selling weekly meta 3 deviations from the stock option. Hey, nice going. Way to go. Not what I'm doing here, but hey, whatever works for you works for me. That being said, Andrew, how are you doing today? Who do we have here? Elizabeth. How you doing, Elizabeth? Miguel, Angel, how are you doing? Who do we have over here? Let's find out. Okay, over here we have Josh, Kevin, Morty, V, Kwani. Okay, Eric, Taco Eater, back again, I see. Angel, how you doing? Kenneth, Rocco, Nick, Bob Darby, D's, Enza's in the house. And there we go. Ron. So, good. This is going to keep me going all freaking night long. No. Okay. Share. There we go. And done. There we go. And let's do this one more time. There we go. All right. So, that being said, the Moonrook. The Mooks. Okay. Ron. The Mooks. Robin. Scott Foley. Enza. Big Win. Logos. Law Not Legal. Logos. Law Not Legal. Okay. Theo. Enza. Thank you for that, Enza. Weave. Gab Goal. Christopher. Higgins Beach Bum. Daddy. Junior Richard. Ahmed. Stu. Fufu, back again, I see. Betsy, Paul, Fufu, Coles. I know you like this one. Yes, I do. All right, so who do we have over here? Let's find out. Who's here? Here we have David, Mike, Christopher, Shortstop, Linda, Sherry, JSX. There we go. All right, so. All right, sit tight. We're going to do this one more time. All righty, and reel, there we go. All right, so Scott, Mike, Ocean 22, Kev Ford, Steeler, Samantha, Thabo, okay, Eve, Kiki, Dees, Xanadude, okay, Phil, Malik, Dietz, Matthew, Gurdeep, how's it going? Kales, Dylan, Lewis, Derek, Jason, Sage, Wage, NQ, Weave, Andy Chin, what's going on? Okay, so Mr. Dave, okay, Enza, thank you very much, my dear. You're doing an awesome job. Thank you, thank you. Once is perfectly fine. Thank you. Oliver, all right, so look at what we're doing tonight. I'm going to show you the strategy that I use, a simple, safe, predictable 1% per week strategy. Yes, I know 1% every week does come to over 50% per year. And I'm okay with that. Okay? Plain and simple. I'm okay with 50% per year. All right, so that being said, what's going to happen is you guys are going to give me stocks to take a look at. I'm going to plug it into my little simple strategy, and then we're going to go from there. Now, remember, I'm 62. I'm retired, so I don't take risks like you guys do. Okay, some of you guys are very risky. Like Meta, I don't play Meta at all. Okay, now, what else do we have here? Johnny Vest, Michael, Chris, Bruce, Rasta, Veal. Okay, so who wants to go first? I think Dave was first with Macy's. Let's take a look at Macy's and go from there. Now, I do this step by step, one at a time. A, B, C, 1, 2, 3. Hey, it's very simple. It's very safe. It is a predictable strategy created for my 9-year-old daughter. So, what I'm doing specifically is I'm doing buying covered calls on pre-qualified dividend stocks. Now, the reason I use dividend stocks is because they're predictable. They do the same thing year after year after year. Just before they pay out their dividend, the stock has a tendency to go up. Well, I should probably record this one. Just before the dividend, the stock has a tendency to increase in price. That is why I like dividend stocks. They're repeatable. They do the same thing over and over and over again. And knowing when they pay their dividend, that allows us to jump in just before the dividend, grab a quick 1 or 2%, jump on out and move to the next stock. Okay, there are literally 266 trading days in a year. Okay, because we can't count weekends and we can't count holidays. So out of those 266 trading days, we got 4 quarters. January, February, March. First quarter. That's where we are right now. We're in the tail end of the first quarter. Next week, the second quarter starts. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Now, just before the dip. Okay, keep going, keep going. Sorry. Instagram is being a little challenging. No. It's not what I want to do. It's not what I want to do. Come on. Okay, do that. Do this. Do that. Do that. Okay. So I'm looking for predictability. Stocks that move consistently the same time of year, year after year after year. Because think about it. When a company pays a dividend, if you didn't know, the dividend is a small portion of the profits that the company gives back to us, the investors. So if I want to collect a dividend, I got to buy it before the EX date. Well, here's the thing. Just before the EX date, the stock has a tendency to go up in value. So by knowing that ahead of time, I can take a look at every single stock that I like, and I can plan in a calendar what I'm going to trade on a weekly basis. Because after all, the first quarter, January, February, March, is almost the exact same as the second quarter, April, May, June, which is almost the same as the third quarter and the fourth quarter. So the stocks that pay a dividend on the first quarter, I should say, so I'm looking. This is going to be a long night. Nope, not that. I don't want to do that. Discard. Okay, let's try this one more time. That. Okay. So if I want a predictable return, I got to look at a stock that does the exact same thing year after year after year. So the companies that pay a dividend on the first week of the quarter, well, it's the first week of the first quarter, the second quarter, the third quarter, and the fourth quarter. And if they all go up just before the dividend date, well, then I know exactly what I'm going to do every single week. Because each quarter, 1, 2, 3, 4, has 13 weeks. 13 weeks. 13 weeks in the first quarter, 13 weeks in the second quarter, so on and so forth. And those companies that pay the dividend on the first week of the quarter, well, guess what? They pay the first week of the second quarter, the first week of the third quarter, and the first week of the fourth quarter. Okay? So, that being said, let's take a look at the first one here on the list for tonight, Macy's. Now, I do like Macy's. They've been in business for over 100 years. Okay, so if I... Okay, this is going to be a long night doing this. Whoops. All right, we're going to get to that in a second. What do we have here? Penwood, that's true. That's why we have 13 months. Okay, no, we don't have 13 months. We have 12 months. I said we have 13 weeks in every quarter. First quarter, second quarter, third quarter, fourth quarter. Add it up. Okay? So, here we go. Macy's, very first on the list. Let's see what we're doing. First and foremost, anytime I look at a chart, anytime I look at any stock, it's always the same thing. Anytime I look at any stock, it's always the same thing. 1, 2, 3, A, B, C. I'm looking for 5 things anytime I look at the chart. Number 1, where's the high? Number 2, where is the low? Number 3, where was it a year ago? Number 4, where is it now? And number 5, what is the motion of the ocean? The path through the woods. The trail, there we go. Down, up, down, up. Simple. People make it more complicated than it needs to be. Just take a little drawing line. Up, down, down, down. There you go. Done. Over with. That's the 1-year chart. After that, I want to take a look at the numbers. Well, if I'm buying it for 1803, I'm going to sell it at 18. Let's open this up so we can see it a little bit better. There we go. So, if I buy it at 1803, I'm going to sell it at 18, pick up 42 cents a share. Now, I know 42 cents a share doesn't sound like a lot, but here's the thing. If I'm going to pick up a premium every single week, I want to make sure that that premium is going to be more than 1%. Well, because that's what I'm looking for, 1% every week. So, current price, 1803, 1803, 1803, 1803. It's up there 4 times for a reason, because that's the current price. So if I buy Macy's, 1803, I'm going to sell it at 18, pick up 42, and that, my friends, is a little more than 2% for 1 week. Now, we all know there's 52 weeks in a year, so 1% a week is going to be over 52%. 2%, well, that's going to be over 100% at the end of the year. But here's the thing. You actually have to do it. I mean, great. It's a great plan. It's simple. It's easy. Okay, out of everything you do in your day, okay, the money you create, especially when you're at my end. Now, when I'm saying, well, this is going to be a long night doing this. Okay, when I say at my end, I'm 62, I'm retired. So all the money that I've accumulated in my working life now has to work for me. So I'm not working for money anymore. I'm working for the interest that I collect on the money that I invest. And I got to be safe. Because unlike some of you, I don't have the luxury of being wrong. And what do I mean by that? Well, like I said, I'm 62. I have no desire to go back into the workforce. Okay, I put in 5 decades. My first job was in 1974. Okay? So I retired recently. I'm going to get to this question in a minute. Hold on a second. Okay, I'm just pausing the questions. Plywood, that's funny. Typically, if there are only 4 weeks exist in a month, then 52 is like 4, so 13. Yeah, plywood, I hear what you're saying, but that's not true. Hypothetically speaking, you're correct. When I say it. Okay, hypothetically speaking, what you're saying is correct. However, we don't have 13 months. We've got 12. Some months have 4 weeks. Some have 4.5. if you add them all up together, yeah, it's 52 weeks, but it's still 12 months. But if you add it up, 365 divided by 13, you come up with 4. I'm not even going to go into the math with you. That's just silly. All right, Andrew, thank you for that. My Music Gen X. Dude, how you going? James, do you ever bend the rules and do a growth stock just because you feel like it's a good bet? Absolutely. You will see. If you check out all my trades from 2024, 2025, and the new ones this year, you'll see every once in a while I do bend the rules because Tesla doesn't have dividends. But you can't escape Tesla. Tesla's going to be here for a very long time. I mean, that boy's doing quite a bit of work. And it's a little bit challenging. We're going to take a look at Tesla in a little bit, okay? So remind me so I don't forget. But Tesla, I got to figure out how is the best way to do Tesla. Because like I said, it has no dividends. It doesn't share their profits. So to do a covered call on Tesla, we have to look at consistency of moving. It's called seasonality. We're going to get to that in a minute, so remind me. Look at seasonality on Tesla, so I explain it. So we're looking at Macy's and see if Macy's is a good deal. So let's check it out. So here we are at Macy's. Here's the top. She's dropped down, now she's going back up. I want to zoom into this right here to get a better idea of where do I think it's going next. Because the charts give us a good idea of where the stock is going next. There's the high, and if it was worth more than $24, it would have been higher than 24, but it's not. So apparently, you and I think that Macy's isn't worth more than 25 bucks because it hasn't reached there all year. Now we think it's worth more than $9 because that's the low of the year. So where are we now? We're here in between the 24 and in between the 9. So we're kind of like smack dab in the middle. And I'm perfectly okay with that. All right, so let's see what we can do with this one. Now, let's zoom into the last 90 days. Looking at the exact same thing. The high, the low, where was it? Where is it? Up, down, up, down. Now she's going back up again because here's the bottom. Here's the top. She's dropped. This is going to be a long night. Oops, no, I don't want to do that. Discard. I don't want to do that. I want to do this, and I want to do that. All right. So last 90 days, you can see that it is bottom out there. Now she's going back up again. So let's do Macy's and let's see if it actually fits what we're looking for. 1% a week. So let's check it out. So last 30 days. Here you go. Last 30 days, same thing. The high, the low. Where was it? Where is it? Down, up. It's that simple. See, the bottom is here. The top is here. And we're right here. We have all that room right there before the 30-day challenge of the high comes prevalent again. So let's take a look. Now, we're going to do the 18s, and let's walk through it. And if you have any questions, just let me know. It's a very easy strategy. We're going to change from single to the covered call. Covered calls where we buy the stock and then you sell the option. So I'm buying it for that price, and I'm selling it for that price, and I'm walking with the product. Hold on. So last 90 days. Okay. Everything's going to make sense as we progress. So a covered call. We're looking at the current $18. It's right there. We're going to do this one right there. $18. That's the covered call we want to do. All right. So just one contract. I don't want to scare you away with big numbers. Here's what it should look like. Here's what it should sound like. By one covered call of Macy's. 27 March 26. That means this option is going to expire this coming Friday. The $18 call option. Remember, I'm buying it at 18. I'm selling it at 18. I'm walking away with 42 bucks. And this is the part where you say, all that work for $42? Hold on a second. Let's get the calculator out and find out exactly what $42 actually comes to. So if the profit is 42 bucks, to find out the rate of return, we got to divide the cost of the trade, including commissions and fees. Everything's going to make sense. Come on. Okay. The cost of the trade, including commissions and fees, is $1,758. So what rate of return is that going to be? And remember, this is for 1 week. This is not for the year, not for the month, 1 week at a time. Sit tight. We're going to divide it by 1,758, comes to a grand total of 2.38%. 2.38% for 1 week. Now we know 1% a week is 50% by the end of the year. Well, 2.8 has got to be at least 110. Got to be somewhere. Let's multiply it by 52 because there are 52 weeks in the year. That comes to 124. Okay, it wasn't even close. But still, 128% for the year is pretty damn good on a stock that's over 100 years old. And it's a household name. We all know who Macy's is. So let's save this one because I do like this one. All righty. All right, and right there. Okay, so let's save this one. Macy's. All right, now, what else do we got? Jerry, Tyson, Oscar, Richie, not rich. You can't have a name Richie without being rich, Richie. Blam, Michael, Osvaldo. Osvaldo, interesting name. Okay, here we go. Let's save this right here. Here we are, right here. Okay, that was for today. Let's do this one here. And this is for Tuesday. Tuesday, very first one. Where the hell did it go? Let's do this again. Damn it. I do it again because I don't know where it went. All righty. All right, let's find out where it went. It's around somewhere. Couldn't have gone too far. There it is. Macy's. Whoa, all righty. There we go. Macy's. Whoops. Macy's. 27 March. The $18 call option. Look at this. $17.79 is the current price. So 42 is the profit. $17.58 is the investment. 2.38. What's wrong with that? First one of the day. Here we go. 2.3. Next. What do we have next? Next. Uh-oh. What do we have here? That's true. That's why we have 13 months. Yep. Plywood. Thank you for that. Elise. What do you do on the second week if the first week drops a lot? Say 10%. Okay. Good question. So here we go. I get this question all the time. So with that question, let me reiterate. Wingnut, I see that. We'll take a look at Kimberly Clark in a bit. Okay? So with that question, I'm going to give you a little bit of an education, okay? Because I feel you're going to need it. Here we go. Now, you're under the assumption that the stock price going up and going down is your we're all be all. Not necessarily so. Because when it comes time to trading stock options, which is what we're doing, okay, don't get scared. A stock option is nothing more than, here, hold my beer, I'll be right back. Basically it. All right, let me explain it a little bit better. Now, Niculator wants to take a look at American Airlines. Let's say American Airlines. Here we go. American Airlines, 1081. Okay, great. Now, if I buy American Airlines at 1081, I'm going to sell the 11, pick up 22, 23. That's 2% right there, American Airlines. Great. Here's the thing. That's for this week. Well, look at this. I got 2 April, that's next week. 10 April, that's 2 weeks away. 17 April, 3 weeks away. 24 April, 4 weeks away. 1 March, 5 weeks away. 6 weeks, 7 weeks, 8 weeks, 9 weeks. Every single week there's a stock option. So if the stock drops from 10 down to 5, here's where a lot of you have a little bit of confusion, okay? Now, when I buy the stock, originally I want to do at the money, because at the money is the highest rate of return you're going to get, okay? Now, if I want a little bit more safety, well, not that one, this one. If I want a little bit more safety, let's do this. Let's go there, let's do that, let's get rid of this. Okay, so we have what is called at the money, ATM. Then we also have something called in the money, ITM. And then we have the third choice, out of the money, OTM. So once you buy 100, 200, 300, 500, 1,100 shares, it's always in increments of 100, because 100 shares equals one option contract. So at the money, do you see this right here where it's purple? There's a line right there. And that line represents at the money, because that's where the stock price is, 1081, right there, at the money. That's the highest rate of return. Now, in the money, which would be up here, out of the money would be down here. Okay, so when you buy the stock, very first week, more than likely, you're going to do in the money or at the money. As the stock drops, you're going to do out of the money, because out of the money, you're still bringing in cash flow, just not as much. So the idea would be to buy it at 1081, sell it at 11 or 1050, whichever one, and then get all your money back by the end of the week. That's why you have to pick another stock next week. But if the stock drops and you still own it, well, then you get to do out. Let's get rid of this. As the stock drops, you change your strike price. 1 strike out of the money, 2 strikes out of the money, 3 strikes out of the money. Let's take a look at Dell for a second. I want to show you what those numbers look like. They're a hell of a lot better than American Airlines. Okay, so the current price, damn it, the current price, 164. At the money would be 165. 1 strike in the money, 162. 1 strike out of the money, 167. But look at the numbers that you're getting. At the money, you're getting 510. Okay. 1 strike out of the money, you're getting 370. That's still 2%. 2 strikes out of the money, you're getting 242. Still over 1%. 4 strikes out of the money, way down here, you're still getting $1.10. And that's not quite 1%, it's more like 0.75%. The further you go out of the money, the less money you get, but they're safer to trade, especially when the stock drops. Because that's all stocks do. They go up and then they go down. So the idea would be to jump in, sell an at the money or in the money call option, get out, grab your profit, and say, let's see what we got next week. I'm terribly sorry. It's not a one and done type scenario. It's something that you have to do every single week. You get up in the morning, brush your teeth, do your hair, get your breakfast, have your coffee, get the kids off, jump in your car and go to work. You do that 5 days a week, 40 hours, 50 hours a week, every single week. So here, for me, I got to spend a half hour to an hour every day taking the money that I've accumulated through my 5 decades of working, okay, I take that money in every single position that I have, I trade something on it. Now, I have to admit, some weeks I get 2, 3, 4, 5% on the initial buy. And then the second, third, or fourth week, it usually drops down to 2%, 1%, 0.5%, sometimes even 0.25%. But here's the funny thing that a lot of people forget. Before you're introduced to weekly cash flow, most people will just happy getting a quarterly cash flow, which means just a dividend every 90 days. So this is just a little bit different. Actually, this is a lot different. Because instead of collecting a dividend once every quarter or every 90 days or every 13 weeks, however you want to look at it, this is weekly cash flow. And yeah, it's going to take you 5 to 10 minutes every day. I'm terribly sorry if doubling your money in 14, 15 months is going to inconvenience you with 10 minutes a day. IWM 20 Delta cash secured put weekly. Good for you. Try explaining that to a 9-year-old. Now, don't get me wrong. I understand exactly what you're talking about. And I agree with you 100%. But what I'm giving here for free is a trading strategy created for a 9-year-old. Simple, safe, predictable, consistent 1% per week. Created for a 9-year-old. You want to make it more complicated? Great. You try to explain to a 9-year-old what 20 delta means. Because you can't explain the deltas without explaining implied volatility, without explaining the Fibonacci sequence, without explaining the Black-Scholes pricing methodology for standardized options. It doesn't work that way. Simplicity. Adults want to make things so complicated just so they can feel smart. This was created for a 9-year-old. 5 or 10 minutes. Good company, buy it, sell it for the same price you just paid for it. And if you have to do it again, fine, do it again. Anyway, what do we have next? What do we have next? Okay, Wingnut wants to take a look at Kimberly Clark. So I'm kind of hoping that made sense. Okay, if the stock drops, you still have the ability to collect something. At the money is the one we usually go for, or one strike in the money. Because I like safety. So me, I would do 1 strike in the money or 2 strikes in the money as long as it's more than 1%. Sorry, but I like safety. Safety, predictability, profitability, consistency, all that kind of nice. I love the Lee family. All right, so what do we have? Wingnut wants to take a look at KMB, which is Kimberly Clark. KMB, Kimberly Clark. Here we go. Check this out. Here's the high of the year, the low of the year. Where was it? Where is it? Look at this. Down, up, down, up. Okay, what's happening right there? 99.45, then 99's going for 150. Well, that's 1.5%. $1.50 is 1.5% of $99. Okay, let's check it out. Now, we see the motion, all right? The last 90 days, what does that look like? Now, the reason I'm looking at the last 90 days or the last 3 months is I want to see the motion. The high, the low, where was it, where is it? Down, up, down, up. Plain and simple. Now I want to take a look at the 30-day chart because the 30-day chart gives me a good idea of what the stock is going to do next. I mean, it's just plain and simple. Okay, here's the high. Here's the low, and then back up again. Well, I went down, up, down, up. Okay, same thing. But she is moving up. If you like Kimberly Clark. Now, if you didn't know, Kimberly Clark, KMB, is what's called a dividend king. Now, a dividend king is any company that has increased their profits for 5 decades. Now, some of you get confused when I lift my hand up. It's not 5 days, not 5 weeks, not 5 years. It is 5 decades. That is 10, 20, 30, 40, 50 years or more of increased profits. That means year after year after year, the price gets higher, 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 higher. That's increased profits every single year. Now, I got 5 simple rules because you already know what the criteria was. simple, safe, predictable, consistent. Okay, 5 criteria. Never buy something you do not understand or you do not want to hold on to. If you don't understand it, you don't want to buy it and hold it for the rest of your life, don't buy it in the first place. Rule number 2, never sell at a loss. It just defeats the purpose of the game. And if you think you need to sell at a loss, you weren't paying attention to rule number 1. Rule number 3, make sure the company is consistently profitable. I know that sounds silly, but you're going to see tonight, and I'm going to point it out, and I'm going to make it obvious when I point it out. Someone is going to ask me about a company that is not consistently profitable. It happens every night. I can come out and say, don't share it unless it's not profitable, and you'll have someone ask me about a company that is not profitable consistently. When I say consistently, I mean year after year after year after year after year, higher and higher profits. Rule number 4, weekly options only. Okay? Like I said, the name of the show is Dividend Stock Talk, or dividend investing for weekly cash flow. So I need something that trades on a weekly basis. And that's a weekly option, because I sure don't want to sit in front of my computer looking at this crap all day. I've done that in my past. I just don't do it anymore. I personally would watch paint dry. Sorry, making money doesn't thrill me anymore. What thrills me is the idea that I can do whatever I want, whenever I want. So, let's take a look at KMB, and we're going to do one of these at the current price of 99, because that's where we are right now. So, let's change it from single to covered call. How did this thing turn off? Okay. Nope, I can't do live. All right. So we're going to do the covered call right there at the 99, right there. Just do one contract. Now, one contract at Kimberly Clark. Okay? We're going to buy it. We're going to sell the option, and then we're going to go from there. Here's what it should look like. Here's what it should sound like. Buy one covered call, KMB. That's Kimberly Clark. 27 March 26th. That means the option is going to expire this coming Friday, 4 days away. The $99 call option. That means somebody, somewhere, is going to buy it from me anytime between tomorrow morning and Friday afternoon when the option expires at $99. So that being said, well, that's weird. That being said, let's check it out. What is the profitability? Because the max profit is $115. The cost of the trade, including commissions and fees, is $9,700. Now, do you remember earlier when I said I want simple? Now, yeah, this is going to be fun. Come on. Instagram is not being cooperative. All right, so I forget where I was. All right, so to find out what the rate of return is going to be, we're going to take the profit, and we're going to divide it by the cost of the trade, including commissions and fees. We need the calculator for that. Here we go. The profit is going to be $115. The investment is going to be $9,785. Now it's going to come to a grand total of 1.17. Well, I'm only looking for 1%. This is Kimberly Clark. They've been profitable for 5 decades. So yeah, I'm going to save this one. Kimberly Clark. All right, we're going to take out some more questions in a second or two. Journey fan, do you roll any? Of course I do. All right, hold on. Wow, we got quite a bit of questions here. I'm going to have to grab a seat and take some of these questions. All right, so I forget. All right, come on. Come on, come on, come on. All right, so we're saving this one. There it is right there, 1.1. There it is. By one, whoops. Kimberly Clark, 27 March. That's just coming Friday. The $99 call option. The profit's 115. The investment is 9,700 for 1.17% for 4 days. Now, just remember. Yeah. Hey, Lily, how you doing? So just remember, 1% every single week is over 50% by the end of the year. If it makes sense to you. That means, number one question, does it make sense? Number two question, do I like this company? Number three question, do I like this company at this current price? It's a yes or a no. You either like it or you don't. 1.1, here we go. Kimberly Clark, 1.1. Next. All right, let's grab a seat. Check out some of these questions. You guys got a whole bunch of questions coming up. Angel, how you doing? All righty, all righty. All right, so what do we have here? What we have here is a failure to communicate. All righty. Oscar, DJ, Avatar, Andy, Michael, Osvaldo, Mr. Fahrenheit. Uh-oh. Mr. Fahrenheit. Oh, how's that go? Oh, I forget it. Freddie Mercury sang that song. Mang, what's happening? 552.99. Okay, slow 4x4. Prince, Andy, Niculator. All right. Wheat. Jeffrey, looking good. Okay, not quite sure who Jeffrey is. Niculator wants to take a look at American Airlines. We'll take a look at that next. What do we have over here? All right. Yeah, 13 weeks. Yep, thank you. Jag. Gorman, how you doing? Joseph. Yohani Yoder. Okay. Elise. Okay, we already talked about that one, Elise. I totally agree with your method. Thank you, Plywood. I love it. After he insults me, he gives me a good going. Okay. I try to make dividends that will equal my salary. Plywood, you and I got to chat, dude, because I think you're doing it, in my humble opinion. Okay, if you're just going after the dividends, you're definitely doing something wrong. I have daily numbers. Okay. OJ Tiles, IWM 20 Delta cash secured weekly. Okay, thank you. Plywood, I try to make $100 a day, dividend options, and I'm at $24. Not quite sure what that means, but okay. Will Tesla be the first to have human robots that actually do work at home for biz? Yeah, they already have them. Yep, got that one. Will Tesla, we already did that one. Enza, I'll do 3 contracts tomorrow with Macy's. Yay! Nice going, Enza. I already have Macy's, Enza. Hey, Dr. Corey's in the house. March 17, 142% increase for Macy call options for your opinion. Okay, for your information. Thank you, Journey fan. Now, I don't buy options, so I understand some of you do. And Journey fan, apparently he does buy options. Nothing wrong with it. Okay, my 1 year target, 17 to 24%. Nicely going. Nice going. Hold on. Journey fan is all Greek to them. Probably is. Chaz, how you doing? OIC, sorry. Okay, you don't need to apologize. You know, you're here trying to learn something. You're participating. Thank you. You got to remember, I'm an old dude, okay? I'm what you call the Gen X. We do things a certain way. We don't really like to follow the rules, you know? If there's a way to do something, well, we want to do it another way. Anyway, Jim, W-E. We'll take a look at that in a second. Let's finish up where we are. Let's get back to the beginning so we can pick up another stock. All right. Journey looks like it dumped 12 bucks. Are we talking about Kimberly Clark or are we talking about Macy's? Because Journey fan, no matter what stock you look at, it's going to have a 52-week high and it's going to have a 52-week low. It's like a roller coaster on any amusement park. It's going to have the high point and it's going to have a low point. Ain't no two ways around it. When you jump on wherever you jump on. Yeah, Journey fan, I get it. 1 year target, 17 to 24%. Okay, I agree with that. Nice going. The real bluefin. What's going on? Uh-oh. Newbie alert. Now I can tell the newbie alert. Anybody who asks me about NVIDIA is a newbie. Who doesn't really. Now I am going to pick on you because nobody has told you this before. NVIDIA is not a dividend stock. Now it does pay a dividend, but it only pays 1 penny. Okay, the book value is what? $6? Hold on. Okay, Nick, you later. We're going to get to American Airlines in a minute. So, the real bluefin. I love picking on people. I do. Here we go. So, we're going to put in NVIDIA. NVDA. Now, for those of you that have been here for a while, you're probably getting tired of me seeing this NVIDIA crap. Okay. So, bluefin. Are you ready for this? All right. Because most people aren't because they think NVIDIA is wonderful. No, it's not. The book value, the current price, $175. That's the current price for NVIDIA, $175 per share. Now, take a look at this just for a second, because most people invest for a rate of return. Now, a rate of return is how much does the stock go up or how many dividends do you collect throughout the year. So, for NVIDIA, the yield right here. The yield for NVIDIA right there. 2%. No, it's not 2%. It's 0.02%. That means in order to get 2 cents out of NVIDIA, you have to have 1,000 shares for the dividend, for the yield. 0.02%. And why is it you think that's good? Hold on. It gets worse. Really does. Okay, so what we're going to do now is we're going to take a look at the statistics for NVIDIA. Now, I always tell everybody, if you're going to be investing, you need access to a financial website. I use Yahoo Finance. You can use whatever website you think is good for you. Okay, so let's take a look at the statistics, because the statistics are going to give us a little bit more insight to exactly what NVIDIA is actually worth, not the hype that you see on TV. Here we go. These are the actual factual numbers. Here we go. So, NVIDIA, $174 per share. $174 per share. Okay. Now, right here, revenue. You do know what revenue means, right? Revenue per share. How much money does NVIDIA have coming in directly related to how many shares they have? You ready? $174, revenue per share, $8. $8. $172 per share, and it has $174. I'm sorry. $174 per share with an $8 revenue. That's it. $8 revenue. Hold on. It gets worse. The book value. Now, if you understand anything about anything whatsoever, book value is more like yard sale price. If you sell off everything NVIDIA owns, everything, the buildings, the parking lot cones, the dustpans, the brush, the mops, the buckets, the broken calculators, the busted up staplers, all that crap. You add it all up together and you sell it all to pay off your investors. Guess what you're going to get? $6.47. So you just paid $174 for a $6.50 stock. That's all it's worth in hard assets. Hard assets, something you can turn around and sell. The book value, that's what it is, $6.47. And their dividend, 1 penny. Where is it? Dividend. Okay. There it is, dividend, 4 cents. For the year. That means you get 1 penny per quarter. Uh-oh. Halloween, MSTR. Newbie alert. Now how I can tell it's a newbie? MSTR is just as crappy as what is this damn thing? NVIDIA. We're going to get to that in a second too. All right, so the real bluefin. What do you think? It pays a 1 penny dividend 4 times a year. The yield or the rate of return you're getting is 0.02%. And you think it's good. The book value is only $6. Okay, so let's take a look at this other piece of crap. The only reason I say that is just it doesn't work for me. Okay, MSTR. Let's take a look. Okay. Oh, wow. This is even worse. MSTR has $1.72 revenue per share. $1.72 revenue per share. Why would you think that's good? Sit tight. Hold on. Book value. Whoa. Holy cow. Book value 141. At least this one has a decent book value. At least they have some assets that are worth something. The revenue's terrible, but the assets, not bad. Look at the dividend. Oh, no dividends. No yield present. So why would you buy it? Anyway, let's go back to where we are. NVIDIA. Oh, my God. Why do I even bother listening to some of you people? Does not sound terrible. It does. Sorry, dude. The real bluefin. Sorry. NVIDIA. No. No, no, hell, no, 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 no. All right. You did that. What else we got? MX, option prices are elevated right now because of the VIX is up. Okay, I got something for you. Are you ready? Now, I don't know exactly where it is, but this ought to be enlightening, okay? If you didn't know, who came up with that one? OJ Tiles and MX. MX, are you ready for this? There it is, MX, right there. Black-Scholes equation. You know what that is? That's the pricing for standardized options. You know where the VIX is? Right there. Whoops. Right there. Whoops. Right there. There's the VIX. Okay? Stock price, applied volatility. I don't even know all this shit. But this is how they price options. It's called the Black-Scholes pricing methodology for standardized options. Okay, what's involved? Well, you got time decay, you got implied volatility, you got the stock price, you have the time, which is the time from the current time to the expiration date. Okay, that's all this. This is how they figure out the stock prices. Not stock prices, sorry. The option prices. It's called Black-Scholes pricing method for standardized options. Where were we? We are right here. Here we are. Oh, this was 1.1. Whoops. Alrighty. 1.1. Back to where we were, if you don't mind. Okay, Journey, do you roll? Yes, I do. I take a look every single day. What did I buy it for? What did I sell? Where's it at now? Where's it going? What should I do? I ask that question every single day. Now I look at my positions every day because I'm retired. Number one. Number two, I've been doing it for 30 years. Because think of it this way: we're the only species on the planet that's got to pay to live here. So to the degree in which you want to live comfortably, it's all going to come down to the amount of money you have coming in. And if you're working, great, that works. But if you're not working and you're retired, the money's going to come from somewhere. Social Security, 401k, whatever, pensions, or your investments. Where's it coming for you? And if you think Social Security is going to help you out, guess what? I put in 5 decades. 5 decades of work. That's 50 years. I put in 50 years of work, and my supposed Social Security check is going to be $585. 5 decades, $585. That's all I'm getting. So yeah, my money has to work for me. So 1% a week on what I have, well, I live very comfortably because of that. Elizabeth Angel, how you doing? Greetings, James. Can you repeat the stock listed on your screen other than Dell and Kimberly Clark? Yeah, Ruben, we'll take a look at that before the night's over. All right. Let's keep doing this. What do we have next? Yes, MX, I know the option prices are elevated because of the VIX. I get that. But there's a little bit more to it than that. These questions are what it's like teaching elementary music. Uh-oh. Thank you, Peyton. Okay, Niculator, want to look at American Airlines. American Airlines. Here we go. Going to do the exact same thing. Every single stock we look at, every single stock I look at is all going to be the same. Where's the high? Where's the low? Where was it a year ago? Where is it now? And what is the motion of the ocean? Down, up, down, up. Well, right there, it's at 1081, 1081, 1081, 1081, 1081. Well, guess what? If I buy it at 1081, I'm going to sell it at 11. And the 11 is paying $23. Now, if you do some quick math in your head, 23 is actually 2% of 11. Actually, it's a little over 2%, but it still works. So what's the rest of it look like? The last 90 days. Same thing. Where's the high? Where's the low? Where was it? Where is it? What is it doing? That's it. And then we break it down to the last 30 days. Last 30 days, right there, exact same thing. Where's the high? Where's the low? Where was it? Where is it? Look at this. Up, down, up. Every single that's the same. Look, it's all going to be the same. Where's the high? Wow. Okay, so let's see what American Airlines looks like. So the 11s, okay, let's get this thing out of the way. Let's do the 11s. We're going to do the covered call, which means we're going to change this from single down to covered. Because remember, on a covered call, we're going to buy the stock first, then turn around and sell it. Now, remember earlier where I said I wanted simple, safe, predictable, and consistent 1%? Well, the simple part comes to, it's the second easiest trading strategy. Sorry, the easiest strategy is just buying the stock. But there's a major flaw with just buying the stock. Because once you buy it, you got to wait. And then you got to wait some more, and then you got to wait some more. Because you got to wait for the stock to move up or go down, and then you decide what you do after that. Well, a covered call is totally different. Because I'm buying it at the current price, 1081. Then I'm going to immediately sell somebody the right to buy it from me at almost the exact same price. So if I buy it at 1081, I'm going to sell it at 11. And for that privilege, that person is going to pay me 23 cents per share or $23 per contract. One contract, $23. 3 contracts, $69. You know, just do the math. It's simple. That being said, does it make sense? Well, great. Let's try it. Covered call. There we go. The 11's right there. One contract. And here's what it should sound like and what it should look like. By one covered call, AAL, American Airlines. 27 March 26. That means this option is going to expire this coming Friday. The $11 call option. That means they have the right to buy it from me at 11. Now, if I'm buying it at 10.81 and they buy it from me at 11, well, I get that 19-cent difference. It's not what I'm looking for, but you know what? Profit's profit, no matter which way you look at it. All right, here's my profit. Here's my investment. So before you say, that's not enough money, everybody says that. 1% is not enough. You got to decide what your time is worth. Because look at it this way. Okay? Now, a lot of people say, it's not worth it. I'm going to agree with you to a point. Okay? Let me explain. All right? We're looking for 1%. Whoop-a-dee-doo. 1%. Big deal. Okay. The strategy is called the 10-minute trading strategy for a reason. Simple, safe, predictable, consistent for a 9-year-old. So it takes 10 minutes a day. 5 days. Remember, there's 5 days in the week. Monday, Tuesday, Wednesday, Thursday, Friday. 5 days. So 10 minutes times 5 days, that's 50 minutes. All right, let's push it out to an hour because you got to do it to turn the computer on, turn it off. Big deal. 1 hour of your time is worth 1% of your portfolio. Now, at 62, sorry, I got 6 digits. I get 6 digits. I worked 5 decades. You work 5 decades, you better have 6 digits or more. Okay? Some people have 7 or 8 digits by the time they're in their 60s. Sorry, I only got 6. So here's the thing. At $100,000, which is 6 digits, 1 hour of my time every week, okay, 10 minutes a day, 1 hour, that is $1,000 an hour for my time. Think about it. Okay? You work 40, 50, 60 hours of your life, you get 50, 60, 100, 200, 300, 400,000 when it comes time to retire. 1 hour of your time is worth 1% of that. So at 100,000, 1 hour of my time is worth $1,000. If I have 500,000, guess what? 1 hour of my time is worth $5,000. So that 1% really ain't that bad, is it? Okay, American Airlines, here we go. Let's do the math on this. What does it come to? The profit's 42, big deal. Okay, what is the rate of return? $1,058 for one contract. Now, you can look at it that direction, or you can look at it this way. What I'm doing is creating a weekly cash-producing asset. Because if I buy 100 shares, that's mine to do with as I please. And I don't have to sell it until I feel like it. If I sell somebody the option to buy it from me at the same price that I paid for it, well, this week it's paying 3.9%. Now, I don't know about you, but 1% every single week is 50% by the end of the year. 3.9%, it's got to be at least 200% by the end of the year. And yeah, sorry, 10 minutes a day. Well, so what if you have to put 15? Big deal. 1 hour a week of your time is worth 1% of your portfolio. Whatever your portfolio is. If you have 20 grand, 30 grand, sorry, you got to pay your dues. I paid my dues for 5 decades. You got to pay your dues too. Anyway, 3.9%. Of course I'm going to save this one. Why wouldn't I save 3.9%? And it's American Airlines, if you like that company. I don't know, do you? It's an honest question. Either you like the company or you don't like the company. American Airlines, 27 March, the $11 call option. $42 is the profit. The cost of the trade, including commissions and fees, $1,058 for a, what was it, 3 point something? 3.9. 3.9% for 1 week. So, and oh, you know what? We're going to do this. Hold on a second. Some of you might like this. 3.9. Okay, so what I'm going to do is I'm going to do the exact same trade, but I'm going to go 2 strikes in the money. Now, what does that mean? Well, currently, if I buy at 11.80 and sell the 11s, I'm going to walk away with 42. Okay, I'm going to change it a little bit, and I'm going to sell, what, the 10s? If I sell it at 10, which is less than what I paid for it, let's see what that looks like. So I'm going to hit edit right there. All right, I'm going to hit edit, and I'm going to change it right here where it says strike price. I'm going to go from the 11 to the 10. And now I'm going to do it at 10. Because think about it. If the stock goes up, great. Well, what if the stock goes down? What if it goes down to 10.01? It's right now, it's at 10.80. So what if it drops down to 10? I'm still making the profit, right? How much am I making? Well, let's find out. Okay, my profit's only $7, but it's only costing me $9.93. Well, let's check out the math. Okay, the math is going to be the same. You take the profit, $7, divided by the investment, $9.93, and that comes to a grand total of 0.7. Maybe I won't do the 10. Maybe I'll do the 10.50. What does the 10.50 look like? Let's edit that one. Change it from 10 to 10.50, which is still less than what we're paying for it. Okay, well now I got the profit of 22, and it's costing me $1,000. So let's see what that number is. It's always going to be a numbers game. What am I buying? What am I selling? What's my rate of return? Okay, calculator. $22 is the profit. Cost of the trade, including commissions and fees, $1,028, comes to 2.1. So I would do the 10.50 as opposed to the 11. Now the 11 is more profitable. Yeah, I get that. But the 10.50 is a safer trade. So you need to come up with that decision. Do I want safety or do I want profitability? For me, it's safety. Sorry, I'm 62. I have no desire to go back into the workforce. Because, good afternoon, welcome to Walmart. Will that be paper or plastic? I get total respect for people who do that. I really do. I respect people who go out and work for a living. I really do. Because you're contributing to society. Okay, we all have to contribute in one way or another. All right. Wingnut, we already did KMB. Damien, what is your thoughts on SRE? What the hell is SRE? Does anybody know what SRE is? All right, let's get out of there. Let's get out of there. Let's go back to here. Let's go back to here. SRE. No. Damien. Remember rule 4? Damien, rule 4. Weekly options only. April, May, July, August, October, November. Those are months of the year. Those are not weeks. Those are months. I don't do monthlies. They just don't work for me. Okay, we did AAL. Thank you. Matthew Hale, how you doing? Austin, what's happening, Austin? Randy, nice to see you. Peyton, these questions are what it's like teaching elementary music. I remember Mrs. Miniclary. She was my elementary school teacher, music teacher. Ernie J, what's happening? Social JJ, how you doing? Hey, Ken Werner, you're 73. You know what I'm talking about, don't you, Ken? Some of these things are like, what? What are you talking about? Okay. You're feeling my pain, brother. Screen other than Dell. Okay. Ruben, we're going to take out all the stocks that we picked just before we're done. Okay. All righty. What do we have down here? Down here, we have the Vigilante. Dell is truly one of my favorites. One of my favorites, too. Let's take a look at Dell. Vigilante wants to take a look at Dell. You knew that Dell only has 2 L's? No. Sorry, dude. No to Dell. I don't buy anything at the high. Sorry, it's just too close to the high for me. But I do like Dell. I will wait for the pullback. See, we're here at 110. She jumped to 170. So from 110 to 170 is 60 bucks. 60 bucks on a $100 stock is a 60% increase. Yeah, that baby's going to come down one of these days. Jordan, how you doing? Elliot, thank you, Elliot. Jackson, what's going on? Jefferson, Jeff. Ernie, what happened on Friday? What happens on Friday? Oh, Ernie, on Fridays, we jump in and we take a look at 2:30. Okay, just be like 2 hours, actually it's an hour and a half before the market closes. We jump on, we take a look at all our positions, then we ask those 5 questions. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? What should I do? Simple questions. Okay, you should know exactly what you bought and what you paid for it right off the top of your head. If I buy Dollar General, I'm going to know exactly what I paid for it. Well, at least you should. All right, Elise, you assume it will be above 18. What happens if it's not? Okay, Elise, if it's above 18, somebody's going to take it away from me, and I get to start over again the next week with all my money back. All right, if it's below 18, I keep the profits, I keep the stocks, and I sell to someone else the following week, whichever strike price makes the most sense. Okay, when I say makes the most sense, remember rule 2, never sell less than when you paid for it. Well, you want to sell a strike option that will give you some rate of return but not put you at risk. Mike, what's happening, Mr. Mike? Dollar General, you say, huh? Now, Mike, that looks kind of interesting. Let's take a look at it. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up. What's going on right there? Seriously, what's going on right there? Here's the high of the year. She dropped. Now she's going up. The low of the year here, the high of the year there. We're here. She's bouncing. Let's zoom in. Zoom in, see what it looks like. But before I do, I don't want to immediately zoom in. Is it even going to be worth my while? Well, what am I paying for it? 125.11. 125.11. 125.11. 125.11. The 125s are going for $2. Not quite 2%, but definitely over 1.5. All right. Let's zoom into the last 30 days. What do you think? Here's the high, here's the low, here's where it was, here's where it is. Up, down, up. Simple, right? Now, do I like Dollar General? Well, yeah, I do. What do the numbers look like? Well, if I'm buying it at 125, selling it at 125, I'm picking up 1.5%. So, let's take a look. Change this to covered call. The 125s, there it is. One contract. Here we go. Buy one covered call. Dollar General. 27 March. That's this coming Friday. It's 4 days away. The 125 call option. 209 is the profit. 12,000 is the investment. What's the rate of return? Because that's what we're looking for, the rate of my invested dollar. Okay, hold on a second. Okay, calculator. Profit, 209. The investment is going to be 12,291. That comes to a grand total of 1.7. Well, my goal is 1% a week. So here's the thing. Current price. Get that out of my way. The current price, 125.11. If I buy it at 125, I sell it at 125, I collect 209, it's 12,000 bucks. It's 1.2. Was that 1.2? 1.7. 1.7. I'm okay with 1.7. Dollar General. that being said, what else do we got? Hold on. All right. Jeff, thank you for that. Ernie, what happens on Friday? We just did that. Elise, if the stock is higher than what I paid for it, yeah, I'm going to be called away. I get all my money back. I pick something else on the following Monday. If it's less than the strike price I sold, I keep the stock, find something to sell for the following week, and I just keep on doing it until it hits my target. Mike, Dollar General, we just did that one. Hold on. Here we go. There we go, Mr. Mike. Dollar General, 27 March, the 125 call option. 209 is the profit. 12,000 is the investment for a 1.7. If you like Dollar General, it's always going to come down to that. Do I like this company? 1.7. Okay, we got one more to go. We got 4. We got one more. 5 a day. What do we got? What do we got? SCHD. Hell no. This and that. Now, remember I told you from the beginning, someone is going to ask me about a company that's not consistently profitable. SCHD is not consistently profitable. It just isn't. Take a look at the numbers. SCHD. Oh, no, I don't want to look at statistics. I want to look at historical prices. Sorry, financial website, Yahoo Finance. What I'm looking for specifically is the data stream. Do you know what the data stream is? It gives you the date, the opening price of the day, the high price of the day, the low, the close, the adjusted, and the volume. Every single day the stock trades, every single one, 10, 15, 20, 30 years of data right there. The open, the high, the low, the close, gives you every number you need. What am I looking for? I'm looking for the dividend. Do you know why I'm looking for the dividend? Some of you know. Because the dividend is the profits that the company shares. If the company is profitable, the dividend goes higher. If the company starts losing money, the dividend gets lower. It's that easy. It's like a seesaw. You get profits, dividend goes up. You don't make as much money, the dividend goes down. Now, when I say consistently profitable, that means the number should be higher, 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 higher. SCHD doesn't do that. Watch, you're going to see. Okay, let's go back 20 years. Because remember I said I want 2 decades of profits? Well, SCHD only goes back to 2011. That's only 15 years. That's not 20 years. Anyway, let's take a look. Okay, SCHD, the very first dividend, 4 cents. All right, so we're going to need to do this. Okay, so if the first dividend is 4 cents, you ready? 4.6, higher, 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 lower, higher, 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 lower, higher, lower, higher, lower, higher, lower. Did you see that? If the company is profitable, the dividends will increase. If it is not profitable, the dividends decrease. Rule number 3, make sure the company is consistently profitable. Oh, hell no, PLTR, come on, weren't you listening? Not consistently profitable, PLTR. Well, let's put it in. Let's get rid of this. I don't think PLTR even has dividends. PLTR. I just don't invest in it because it just doesn't fit what I'm doing. There are no dividends for PLTR. No. Now, you want to see what I think consistency of profitability should look like? Just give you a rough idea. Microsoft, you ready? Let's go back 20 years, which would be 2006. 2006. Sit tight. Prove I'm human over here. All right, you ready? 2006. Whoops. This Jose, okay? This is what consistency of profits looks like. 31, 36, 39, 42. Ooh. 42, whoops. 46, 51, 56, 62, 68, 75, 83, 91. Every single year, they increased their profits. Every single year. They are called dividend kings. 5 decades of increased profits. Second list, dividend aristocrats. 25 years increased profits. Dividend champions. 25 years increased profits. Yeah, I know the rules are a little different between the champions and the aristocrats, but still, 25 years increased profits. Hold on. I'm not used to talking so much. Dividend contenders, 10 to 24 years increased profits. Those 4 lists right there will give you over 300 companies to look at. And guess what? SCHD is not on that list. PLTR is not on that list. Kimberly Clark is. Bank of America, I don't think, is on that list. Anyway, what else do we got? All right. Ooh, Robin, Verizon. We looked at Verizon last night, didn't we? Let's get rid of that. Let's get rid of this. Let's get rid of that. Let's go over here and let's put in Verizon because somebody wants to take a look at Verizon. The Z, there we go. Ooh, now see, as much as I like Verizon, this scares me a little bit. Here's the high, here's the low, here's where it was, here's where it is. Sideways, down, sideways, up, down, up. Way too close to the high for me. Look at where it usually is, down in this area. That big, huge jump right there, that scares the hell out of me. No, thank you. Next. Frank Fernandez, how you doing? I love peanut. Okay, Doug Fry. Good day, James. Oi, good day to you too. Hey, Undeed under car. Okay, Undeed. You need a car. Oh, cool name. Okay, MSTR, hell no. Yep, whatever. I'm a crypto guy. All right, good for you. How can I play MSTR covered call? Sorry. MSTR is not consistently profitable in my book. It's a no. Ooh, Joe, UNH, United Health Group. Okay, unfortunately, this baby's falling, but take a look, Joe. Here's the top, 600. Here's the bottom, 230. That's a big groove. Okay, shoot down, up, down, up, down. That's it. That don't look that good, Joe. Right? Look at that. Nope. Not this week. Toothpick. Pulsar Helium has a huge find, and TSM has a helium shortage. Just saying. Okay. So how are we supposed to play that one? Just stack Horde. Enjoy. I have no idea what Horde means. Never heard of it. No, thank you. Robin, we just took a look at Verizon. Butch, isn't that Allegiant? Allegiant, yeah. No. Sorry, I don't do monthlies. We already talked about that. Green Bean. Want to start? Have Norwegian cruise stock. Can this work? Is that NCL? Nope. It's not NCL. NCLH. Okay. Interesting. Well, let's take a look at NCLH. Okay, Green Bean. Hold on. The high, 27. The bottom, 14. Where was it? 21. Now it's at 20. Down, up, down, up, down, up. Okay, that looks kind of interesting. Well, let's zoom in. Okay, here's your top at 25. Drops down to 18. Now she's going back up. if you like this. It's at 20. Okay? The 20 is going for 69. That's over 3%. If you like Norwegian Cruise Line. Well, let's find out. There we go. At 20, right there. One covered call. Here we go. Here's what it looks like. Here's what it sounds like. Okay. By one covered call, Norwegian Cruise Line, 27 March 26. That means it's going to expire this coming Friday. The $20 call option, profit is 72 bucks. The investment is 19.28. Let's bust out the calculator and see what numbers that looks like. 72 is the profit. We divide it by the investment, which in this situation, 1,928, and that comes to a 3.7 for 4 days, 1 week, 3.7. Now we know that 1% every week is 50% a year, 2% a week is 100% a year, 3% has got to be at least 150, and then 3.7, that's got to be at least 183. Let's find out. Multiply it by 52, because there's 52 weeks in a year, 194. All right, I was close. By one cover. All right. So, close. 3.7. All right, well, let's save this one. 3.7. Why not? If you like Norwegian Cruise Line. $3.7. I like 3.7. That's a nice number. Where is it? Where is it? There it is. Here we go. Norwegian Cruise Line. 27 March. The $20 call option. 72 bucks is the investment. 19.28. Sorry. 72 is the profit. 19.28 is the investment. For 3.7. 3.7 for 1 week. If and only if you like Norwegian Cruise Line. 3.7. All right, so, Ruben, you ready? Here we go, Mr. Ruben. We got Macy's, 2.3. We got Kimberly Clark, 1.1. We got American Airlines, 3.9. We got Dollar General, 1.7. We got Norwegian Cruise Line at 3.7. What else we got? All right, let's see what kind of questions we have here. All right, Oscar's house. Get more hearts. Got yep. All right, what do we have here? Okay, pulsar helium, stack cord, never heard of it. Sometimes the forever holds give nice volatility. Thank you, Hollyweed. Coffee beans, what tool are you using? Do you mind walking through a beginner? Coffee bean, this right here behind me is called Think or Swim. It is a trading platform offered by Charles Schwab. One of the biggest trading platforms there are. Okay. Hollyweed, crypto best yield on the planet. Terribly sorry, dude, I'm going to have to disagree with you. The only reason I'm disagreeing with you is crypto has nothing behind it other than a wink and a nod. What tool are you using? We already did that, we already did that, we already did that. I only need to ask a question once. I'll see y'all at the moon. All right, Hollyweed. Steve-O, I can tell you American Airlines is a no. Thank you there, Steve-O. All righty. Hollyweed, loans aren't taxed. Borrow endlessly. Hollyweed, I agree with you 100%. Collateral, 100 times crypto. Doesn't work that way. For equity guys, Tesla. Okay. Mindang, should I buy ExxonMobil at 159? Now, I can't tell you what to buy and what to sell. I could, but I ain't going to. This is what ExxonMobil looks like. You want to buy it at the high of the year? More power to you. I don't buy anything at the high of the year. Okay? You buy low, you sell high. It doesn't really work the other way around. RUTTS. I have no idea what TTS means. Journey fan, Kimberly Clark. Hey, Dr. Corey, Bank of America. Interesting. Interesting, Doc. Let's take a gander at this one. Here's the top. Here's the bottom. Here's where we were a year ago. Here's where we are now. It dropped, shot up, back down, back up. What's going on right there? What's up, Doc? What's with that? Here's the last 30 days. 30-day high, 30-day bottom. 1 day up, 2 days up. What is tomorrow going to look like? I love 2 days up from a 30-day bottom bouncing off of a 30-day high. Down, up. If you like Bank of America, it's always going to come down to that. Latest, Murrow. Thank you, Journey fan. Thank you, Journey fan. Thank you, Oscar's House. Vacation. Sasha Dundee. How are you doing, Sasha? Starbucks looks like Kimberly Clark. Well, Rob, let's take a look at Starbuckies. SBUX. Kinda does, doesn't it? Take a look. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at it. Down, up, down, up, down, up. What's going on there? 93.83. What does that look like? Kind of nifty if you look at it. Aren't you going to mention the implied volatility is not an input but an output? No. Thank you, Sulfur. Is it Cipher or Sulfur? Cipher. Implied volatility is interesting, but how do you explain implied volatility to a 9-year-old? The trading strategy was created for a 9-year-old. Now, I could go into implied volatility. I could also go into the MACD. I could also go into the relative index, relative strength index, the RSI, relative strength index. I could do that. I could also do the Fibonacci sequence or the Fibonacci retracement or the moving day averages. Now, it's a 20-day moving average, the 50-day moving average, the 100-day moving average. I could do all that kind of stuff. But it gets more complicated when you're doing that. That means you got to sit in front of your computer longer. Fine, great. You do that. Okay? I'm looking for simplicity. Simplicity is, well, it's simple. Same thing. Okay? Here's where it was. It went down. It went up. It came down. Now it's going up again. It's elementary. Okay? I can get a 5-year-old to tell me there's the top, there's the bottom. This is the direction. It went down, it went up, it went down, now it's going back up again. What's so complicated about that? What does implied volatility have to do with the fact that this is the 30-day high, this is the 30-day low, she dropped, now she's going back up again, the 93.83, the closest one's going to be the 894, and that's 139. It's actually that simple. You want to throw implied volatility in there, you do it. I have no desire. I like simplicity. Sorry, I grew up in the 60s and 70s. If something worked, we left it alone. If it ain't broke, don't try to fix it. Okay, complexity does nothing but stroke the ego. You want to be more complex? You do it. I like simplicity. Simplicity takes, what's the good word for that? Takes dedication. Simplicity takes dedication because what's another good word for that? Dedication and stick-to-itiveness. I like to say stick-to-itiveness, but that's not the right word, not the right term. Now, FTV, do I hold for a long time? That's always going to come down to your definition of a long time. Okay? My input on long term is 30 days. Okay? 30 days. That's long term for me. Okay, for some people, long-term could be 20, 30, 50 years. Fill my Hooters. Okay, interesting terminology. You want to take a look at Microsoft, MSFT. Well, here you go. Here's the high, here's the low, here's where we were, here's where we are. She dropped to the bottom, 340, shoots up to the top, 560, drops back down to 380, shoots up to 410, drops back to 380. Not today. Can you do a Microsoft contract? Yes, but why would I? Because let's take a look. Here's what Microsoft looks like. Okay, 394, shoots up to 412, drops down to 382. Now we're at 383. Okay, is that bouncing? It could be. Okay, the 380 is going for 655. Well, that's a nice number if you like Microsoft. Okay, the 382.50s are going for 505 if you like Microsoft. It's always going to come down to, do you like the company, and do you think now is a good time to buy it? When I see a drop like this, that's a 30-day high, 30-day bottom. Me personally, I want 2 days to the upside, and then on the third day up, I will jump in. We only have 1 day from this bottom. Okay, she bottomed out on Friday at 380. Well, today we're at 383, which is a little bit higher if you like Microsoft. And it's always going to come down to that. Do you like this company? Does it sound like something you want to jump into? Appolido, what do you think about the poor man's covered call? I love the poor man's covered call when it works. When it doesn't work, it bites you in the butt. And yes, I got bit in the butt with Macy's at the end of last year. So I'm ended up short on Macy's 1,200, I think it's 1,200 shares. Short on Macy's 1,200 shares at 12. Macy's is like 18 now. So I'm basically screwed until this thing drops all the way below 12. And it may never even hit below 12 again. So yeah, poor man's covered call works when it works, but when it don't work, it's not very happy. You got to remember, anytime you add risk to what you're doing. Now, a poor man's covered call is a great strategy. It really is. But the risk in the poor man's covered call is you're buying the long option and you're selling the short option. Some of you might not understand that, but still, two option trades, they both are going to expire. And yes, you might get a higher rate of return, but you're also increasing the risk. All right, what else do we got? John, how you doing? Troy Richards, how are you? Pat Meister, JC, Collins, Backstop Rutherhood. Oh, okay. Rob, GIS. That's, don't tell me, General Mills, GIS. General Mills, GIS. Unfortunately, General Mills is a monthly. April, May, June, July. I don't do monthlies. They just don't work in my favor, so I just don't do them. The Outlander 3. How you doing? Ramus Martez. How you doing? Shoot, I like this process, but I don't want to own more stocks. Well, why don't you do covered calls on the stocks you already own? MJS, what's happening? Danny, 901C. What do you think about SMCI? Hell no, it's not a profitable company. Coffee beans, like, thank you. Metri, I own Altria at 67. It's now at 64. I'm married to it for a minute till it rebounds. Can you show me? Absolutely. Now, I love Altria. I really do. But here's the situation with Altria. Okay, here's the high, right around 71. The bottom is here around 53. Okay, a year ago we're at 55. Now we're at 64. So she dips, shoots up, pulls back, shoots up again, and now you have your profit taking. What we're going through at the moment is called profit taking. The bottom right here, 55, shot up to 70. So 55 to 70 is 15 bucks. 15 bucks on a $55 stock is about 30%. That's a 30% jump. Well, this is the pullback right here. What's going to happen? It's going to find the bottom here, turn around, and go back up again. So at this moment in time, you're in at 67. Let's zoom into this. You're in at 67. Well, what's wrong with selling, this week's 65 and a half? So, no, there is no 65 now. The 66s are paying 8. Ugh. And the 65, that's too close for comfort. Basically, just the 66s. But you're only bringing in 8 cents, but 8 cents per contract. And it's not the greatest in the world, but you're bringing in something while you're waiting for the bounce to hit. Mighty bargain. Book value equals yard sale price is a great analogy. Thank you there, Mighty Bargain. Ooh, Wellness Wave 3M. Gotta love me some 3M, especially take a look at this. Here's the high, 176. We dropped to 140. Now she's bouncing up. Here's where we were. Here's the low. Here's the high. Look at this. Down, up, down, up, down, up. 146.50. The 146s are going for 220. Not quite 2%, but still, it's 3M. It's over 100 years old. You either like the company or you don't. Let's sit down and take some more questions. I'm making a mess. Freaking thing. I got some paintings I want to hang up. I just haven't had a chance to do it yet. All right. All righty. All right, Mr. Rubin, how you doing today? All right. Okay, Metri. To sell the options on it. Okay, Metri. To sell a covered call on Altria, how do I do that? Ooh, that's a good question. Well, you already own the stocks, okay? If you already own the stocks, you actually have to be approved for option trading. So you basically go, put your symbol in there, okay? Click on single, and then you want to sell. Okay, this is a sell column, and this is the buy column. I don't buy, I'm a seller, so I sell. Whatever strike price I choose, I pick whatever premium looks best and far enough away where I'm not at risk. Because you got to remember, the stocks go up and down, up and down. You have no idea where it's going to go tomorrow. So that's why I look at my account twice a day. Once in the morning with the morning trading group, which, by the way, we do every single day, 9 a.m., except on Fridays, we go on 2:30 just before the market closes. Add you investing all of your available cash on a weekly basis. Chris, absolutely. He wants to know if all my cash is invested on a weekly basis. I'm going to say no, because I put aside like 2 to 3%. Okay, so I do have in my checking account like maybe a couple $1,000, but other than that, all my money is invested at all times. Because contrary to popular belief, I'm 62. I know what my monthly bills are. And if I'm getting paid on a weekly basis, why would I leave any money on the sidelines? Think about it. Why would you leave any money on the sidelines? What are you waiting for? Okay. Now, I don't suggest people doing this until you get good at it. Remember, I've been doing it for 30 years, 3 decades. So I have a good grasp on what I'm doing. And I don't suggest anybody do what I'm doing. This is just a starting point. Okay? Learn to invest your own money. Pick a good quality company. Pick a strategy that is simple, safe, and predictable. Okay? It's your money. You should invest it the way you think is best for you and your family. What do we have next? Oh, 3M. Let's zoom into this. Check this out. The last 30 days for 3M. Now, I like 3M. Wellness wave. However, so here's the top at 168. She drops down to 140. Now she's bouncing. But it's only one day to the upside. Okay, the bottom was Friday. Today, we have a higher high and a higher low. So she is bouncing off of that. But it's only one day. I don't jump into anything until at least 2 days. And then on the third day, I will jump in. Kush want Randhawa. Okay, Walmart, WMT. Now, I do have some Walmart. Interesting. Take a look. Here's the top, the bottom. Where was it? Where is it? Look at this. Down, up, down, up. Okay, let's zoom in. Okay, 30-day high, 30-day bottom was Friday. Today is 1 day higher, but only one. Only 1 day to the upside. I like 2 days to the upside. On the third day, I'll jump in. Thomas Prince, the ups dude, UPS. Interesting. The exact same thing we just saw with Walmart. Here's the high, here's the low, here's where it was, here's where it is. Down, up, 97.67. The 97s go for 187, 2% if you like UPS. Let's zoom in. Okay, 30-day high, 30-day bottom was Thursday. Thursday. Friday was higher, today is higher. If you like UPS. So the 97 or the 97.67, okay, the 98's paying 137, the 97's paying 187, depending on whether you want profitability or safety. Me, profitability. Sorry, I'm retired, I'm 62. I don't want to take chances. What else do we have? Brooklyn's in the house. Hector, what if they reinvested? Great plan, Hector. If you don't need the money, just reinvest it. Just keep the ball getting bigger and bigger and bigger. Matt Tree have Altria, and it dropped. Okay, we already talked about this 2 seconds ago. Okay, I like Altria too. Just find a strike price that makes sense. J, MSTU. I have no idea what the hell that is. MSTU. Okay, daily target ETF. That don't look very promising. Look at where it is. That don't look very good at all. Ooh, nail, N-A-I-L. What the hell is that? N-A-I-L. Interesting. That's one of those Direxion ETFs. Okay, if it doesn't have dividends, probably not. What else do we have? Ooh, user 329160. Okay. Hewlett Packard, HPE. Nice. Take a look at that. The high, the low. Okay. The high, the low. Where was it? Where is it? Look at this right there. Okay, she drops. Now she's going up. She's at 22.32. The 22.50s go for 27. That's over 1%. If you like Hewlett Packard. Weird. Isn't that weird? Do you like Hewlett Packard? Okay. Kim, how you doing? Jerome, what about peanut butter and raspberry? Yeah, I know. This is one of those oil companies. PBR. Petroleum Brazil. Hell no. I don't buy at the high. Sorry. All right. Bought Altria last Monday and sold covered call. Went down. How do I sell future covered calls without losing baseline? We just talked about that, Matt Tree, like 4 times. Billy! Listen to this guy if you want to stay poor and make 8% a year. Oh, Billy, you haven't been paying attention, but thank you for your input, Billy. Broski, how are you doing? Big supporter watching your live. Thank you. Thank you. Thank you. Hollywood Leaf. Hollywood Loaf. Hello. Alex Under the Sun. Thank you, Alex Under the Sun. Batman. 1% weekly return is crazy. Okay. Ooh, always a Marine. Oh, that's true. Semper Fi. Cool beans. NVO. All right, let's take a look at NVO. I actually have some NVO, and it just doesn't make me happy, but I still have it, and it does still bring me some weekly cash flow. Okay, so here's the top 81. Here's the bottom 34. 34 is the bottom. 81 is the top. Down, up, down, up, down, up, down. Okay, what's going on there? And do you like this company? Look at this big drop right there. Okay, down, up, down. Now she's going back up again. 37.82. Now I like 2 days to the upside. Today is just one. Let's zoom in a little bit more. Okay, drop. Now she's going back up again. If you like NVO, you always have to take a look. I have been using PMCC, but I only play on finding sweet spot. Hey man, what's happening? How you doing today? Thank you there, Batman. Virgil, thank you. Wolf Bits, thank you, Wolf Bits. So PMCC, what the hell is that? PMCC. Peloton. Sorry, it has no minerals. I mean, no options. What was I thinking? Wolf Bits, different channel. I got 9 different channels, Wolf Bits. 9 of them. Merv, how are you doing? Kim, PayPal. Okay, Kim, I thought we talked about PayPal a while ago. PayPal doesn't have any dividends. Or, wait a minute, they just started paying dividends. So not quite. This isn't the original guy. Hello, Wolfbit, what do you mean? Pre-recorded? Wolfbit, how can you possibly say this is pre-recorded if I'm actually reading your text messages? Now, Wolfbit, you got to remember that I'm live streaming on 9 different channels. You're on channel number 1. Okay, TikTok number 1, The 10-Minute Trader. There's TikTok number 2, Dividend Stock Talk. Pretty soon there's going to be TikTok number 3, which would be Dividend Capturing 2.0. But I'm sorry you feel that this is pre-recorded. Now, just to let you know, for the rest of you, in case you're curious, it is currently 10:58 p.m. on the 23rd day of March 2026. So if you're listening any other time than March 23rd, 10:58 p.m., well then yeah, it's a recording. But at this moment in time, it's live. Okay? Now, I'm sorry I didn't get your question earlier, so it makes it seem like it was pre-recorded. Anyway, besides the point, let's keep on seeing what we got. Down here, Vigilante. What if the company is still profitable but has decreased year-over-year net income growth? Well, in that case, if they decrease their dividends, it's going to be a no. DPST, what is that? What is DPST? DPST. Direction Daily, yeah, this is going to be a no. No. Those Direction ETFs, they don't pay weekly options. Thank you for that. 3M, we already looked at 3M. QQQI is all we need. Who's it? Chicago Stoic. Okay. Tesla, the over-trash stock. I'm not quite sure what you mean by that, but okay. KML, think SPY will go up tomorrow? Of course it will. And it will also go down because that's what stocks do. They go up and they go down. Monroe, check your book. I told you about GLW, time to play. GLW, hold on. That's Corning, isn't it? GLW? GLW. And it is Corning. Okay. Now, I'm not 100% sure what you mean by check your book. I told you about GLW, time to play. Well, Montreal, New Jersey talk. Oh, Monroe. Oh, Monroe, New Jersey talk. I got a minor problem with that. Number one, I got no idea who you are. So if I have no idea who you are, what? You wrote it in your book. Yeah, I wrote 15 books, brother, so which one are you talking about? So, GLW, the high was 160. The bottom was 38. She shoots up, pulls back, now she's going up again. But is it the right time to buy? Okay, she shoots up, pulls back. Now she's going up again. The 131s are going for 380. Well, yeah, that sounds like a good deal if you like Corning. Now, I do like Corning. It's just not on my list for this week. 2 weeks ago, you said you would look. Now is the time. Okay, hold on a second. So, you're talking about this book. Okay, so let's see where Corning is. GLW. Yeah, that was 2 weeks ago. Okay, this is 2 weeks ago. This is this week. And this is next week. So yeah, Corning right there, GLW, 2 weeks ago. Okay, so 2 weeks ago would have been right there. Is that right? No, we're here. 2 weeks ago would have been here. Yep, the drop, the bounce up. Didn't quite make the 3 days though. But you're right, I did write it in my book. Great option premiums now. Yeah, you're right. The 131s are going for 380. That's a great number if you like this company. See, right now, here's the bottom, and she is slowly going up. And it's at 130.97. So the closest option is going to be the 131, and that's going for 380. Well, I like that number. 380 on 131. Not quite 3%, but close. Chicago Stoic. You like QQI, do you? Oh, wait a second. We're past that time of day. But just for the fun of it, just for Mr. Chicago, QQQI. You think QQQI is all I need? Sit tight. You're not going to like this. Here we go right here. NEOS NASDAQ 100 High Income ETF QQQI. Let's check the profitability of QQQI. Let's go all the way back to the beginning. Now, see, I got a minor problem with a company that's 2 years old. February 2024. February 2024. 2 years ago. This is a 2-year-old company, and you think it's all I need? Sit tight. Check this out. 59 was the first dividend. 60 higher. 58 lower. 61 higher, higher, lower. Higher, lower, higher, higher. Let's go. Keep going. Higher, lower, higher, 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 lower, lower, lower. Higher, lower, higher, lower. Higher, higher, lower. How the hell can you say that's all I need? This thing can't figure out which direction it's going. It goes up, it goes down. It goes up, it goes down. How the hell? Never mind. Whatever. You do what you want to do. I'll do what I want to do. Wellness Wave, I'm terribly sorry you don't like Tesla. No, the one thing I don't like about Tesla is it doesn't have weekly options. Actually, wait a minute, it does have weekly options. It doesn't have any dividends, which means they don't share their profits. I finally got a good one, TK. What the hell is TK? That's terrible if I have to say, what is that? TK. TK Corporation. Niculator, come on, dude, you've been here long enough. TK is a monthly, and you know I don't do monthlies. What do I mean by a safe trade? Kina, how are you today? Nice to see you, Miss Kina. Michael, try XPay. Never heard of it. XPAY. Round Hill S&P TF Men ETF. Terribly sorry, dude. There are no options available. So my assumption would be you want me to sit in front of my computer and look at this crap all day long. Yeah, no thank you. Sorry. TK means thank you. Yes, but TK is also a stock, dude. Can't do that to me. Well, what do I mean by a safe trade? Ooh, that's a good one. Let's take a look at Macy's for a second. Okay, so we can see Macy's right here. Okay, 17, it drops down to 16, now it's going up. You cannot argue the fact that it's bouncing off here, going higher and higher and higher. Okay, So Macy's. If I buy Macy's at 18.03, I could sell it at 18, which means if the stock is above 18 come Friday, somebody's going to take that. I get all my money back. Well, that's what I'm looking for. Ideally, that would be great. Now, safer would be selling the 1750s because now the stock has to go backwards even further. But the 1750 is only paying 74, which means I take the 1750, add the 74 to it. Now I would be at 1824 because that's what I'd be walking away with. So if I buy it for this, I sell it for that, I collect this, so you add that to that, and that's what I walk away with, 1824. Well, 1824 is still higher than this, and the stock just has to stay above 1750. So the further in you go, the safer the trade. But the safer the trade, the profits actually drop a little bit. So at 18, I'm going to collect more than 2%. At 1750, I'm going to collect a little over 1.5%. See what I mean? So safer, yes, but a little bit less money. All right, it's past 11 o'clock. We're going to call it a day. Going to answer what few questions we have left. WDC, we'll take a look at that tomorrow. Wellness Wave, we'll take a look at Coca-Cola tomorrow. Advanced Auto Parts Gen Xer, dude, how are you doing? Running Gold, catch you tomorrow, brother. Have a great day, have a great day, have a great day. What do we have going down here? All right, I got to play me some theme music while we're wrapping up. And that would be here, that would be right there, and that would be right there. And my theme song. Definitely needs to be louder, though. Yeah! Yeah, I like that song. All right, so we're going to do this all over again tomorrow. You guys have a great day. Yeah, another 5 more tomorrow. Can you explain the strategy again? Absolutely, Mr. Bist. What we're looking for is simple, safe, predictable, consistent 1% per week. Only with stocks that are consistently profitable for at least 2 decades of increased profits. Safe, predictable, consistent 1% per week. I'm here every night, 9 to 11. You understand the logic? Great. Well, the strategy is easy. Come back tomorrow. Vigilante, Gen X. Real thank you for tomorrow. Mr. Lucky Larry, how you doing? Benjamin, how you? Yep, Vigilante. Since you're selling covered calls, don't you profit from the contracts when the stocks actually falls? I profit from the contracts when I sell them because I collect that premium as soon as I sell it. You have another Ken here at 73. All right, Ken. All right. I'm eyeing buying a big load of Capital One Finance. Ooh, I like Capital One Finance. If I was to buy one stock, 1,200 of every few weeks, what's a good pick? Josh, how you doing? What the hell were you thinking? You laugh as you got you guys have a great day. See you tomorrow. She's tethered light, still flying high. I like that song. Gravity can pull you down. You're the wild away the crown. All right. Wow, my voice. One can see oh, well, that's a no. What the hell were you thinking? Your life is not keeps the daylight blinking. Change in my story. Done, 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 done. Catch you guys tomorrow.